Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Happy St. Patrick's Day, everybody. Okay, let's take a look at the equity markets. Equity markets are under some pressure now, although we're getting a pretty good relief rally this morning. Dow's been up about 200 points. It's up about 170 points now. NASDAQ was up about 45 points, up about 40 points now, and the S&P's up about 20 points. So pretty good relief rally. So we'll see if this can hold. Now, the reason I say that the market is under pressure is that on the NASDAQ, we've seen over the last 5 weeks, 6 days of heavier selling, so-called distribution days. And those days indicate that most of the rallies were sold into and institutional money was taking some money off the table. And that's the kind of thing you usually see before a market downturn. However, the NASDAQ has shown some support at the 42.75 level, but pretty much crashed through that on Thursday and Friday and went back to its January, where it made a high in January at the 42.46 level. Seems to be holding that level, and Friday it closed just a smidge below that. However, it's got a big bounce off of that, so maybe perhaps this is just a short-term digestion. You have to remember the NASDAQ rose about 8.5% since the February 5th low. That's a big gain, and all big gains always have to be digested. So far, it looks like, even though there's some pressure in the market, we're seeing more of the same of what we've seen all last year, where the market makes a big advance, pulls in a few percent, then continues on. So that's to be seen. And the S&P 500 seems to be holding that 1848 level, important level. Slipped below that again on Friday, but today again we're above that. So I'd look to see at the end of the day what the volume's like and see if this is a real rally or just sort of a bit of a sucker rally. S&P might still test down to the 1830 level. If it drops below that, there might be a serious change in trend. And the NASDAQ, if we get down below the 4100 level, that may be a very serious change in trend as well. Now, if you're trading stocks, the best thing is always to do is look at stocks, study stocks, see what they're doing. But there's other things we can kind of look at. For instance, we can look at bond prices and bond yields and see what they're telling us about the health of the economy and what typically happens with stocks. Now, the 10-year has been sliding, the 10-year yield has been sliding since the start of the year, up from where it was about 3% down to about to the low 2.6, above 2.6. It bounced off of there Friday again. And that seems to be an important level that it wants to hold. The October low on the yields was a little bit below 2.5%. Now, if the 10-year yield were to slip below that 2.5, or I'd even get a little bit worried below 2.6%, that may be telling us that the markets are nervous and it may be time for that big correction in the equity market. So that's something to watch for. Now, another barometer everyone looks at is copper. Copper prices. Copper's called Dr. Copper, a pretty good indicator of economic activity. Now copper prices have been falling all year, and they've pretty much slipped below the $3 level. So everybody tells them that it's doom and gloom. I'm not so convinced, because one has to take a longer-term view of what really went on with copper. If you look at a 20-year chart, copper pretty much until the early 2000s was trading between $1 and $1.50. And in about 2003, 2004, when China's economy really started heating up, that's when copper prices really took off. And of course, the 2000s were a commodity boom. Now, since 2012, stocks are outperforming commodities. Copper is warehoused pretty heavily in China, so there just may be too much of it out there right now with the Chinese economy slowing down. So it might not necessarily be quite the economic bellwether that everyone's making it out to be. So, in summary, watch your stocks, take a look at the indexes, watch the 10-year note. I wouldn't give too much weight to copper. But as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.